Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. As is usual at this time of year, I stop looking at my daily and weekly charts and instead concentrate on the longer term view using my monthly, even yearly charts. If you'd like to discuss any of these, I'd only be too happy to hear from you. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, let me now introduce today's longer term chart.
Today I'll be looking long term at LME 3-month aluminium. I said the following 3 years ago at the start of 2023, and I quote, "The low in the first third of 2020 has become hugely significant. It was where the market created a new 2015 to 2020 bullish Andrews pitchfork, highlighted in bright red on my monthly chart. One that seems to still, despite being breached, one that still seems to be running the market, at least for now. The rally higher since that low, which, as I said last year, so that's now 4 years ago, which I said last year, had no fewer than 5 golden crosses and a 6th one in early 2022, and that's the end of the quote. That bright red bullish Andrews pitchfork is still valid today, with the lower time, currently at 25.51, working since 2024 in conjunction with the rising gold 5-year moving average, currently 25.48, in slowing and halting attempts to push lower during 2024, and then again between April to June 2025. In the whole of its existence, there's only ever been one monthly close below this bullish Andrews pitchfork and none above. This is quite a remarkable feat. For quite a while, it looked like it might be a possible double bottom pattern, if not an extremely ugly example of one. However, the market has stepped away from such a pattern, and it rejected the idea of a bearish half hesitation. So what could it be? Last year, I gave an idea of a possible alternative, and I quote, "I added a further label to my monthly chart this year, that this whole action might be becoming something else, and by that I mean possibly, just possibly, the action since the middle of 2022 to date might be becoming a possible reverse head and shoulders pattern. It would be an ugly reverse head and shoulders pattern if it did choose to go down this route, but it is worth considering. Hence, I've taken the liberty of drawing a possible neckline for such a pattern. I hasten to add that this is without the second shoulder fully formed, but I'd rather draw it now and have it questioned than not draw it at all." And that's the end of the quote. Now this year I've highlighted that neckline in dark blue, currently at 29.47, and in December 2025 we had our first close over it, with this January looking at the moment like it might confirm the move higher. This is still an ugly looking reverse head and shoulders pattern, but I think the move has been enough that I lay some potential targets topside for this pattern. Hence a primary target X would be up in the 34.03 area, and a secondary, harder to reach target X1 would be up in the 35.92 area. I'll now see if these targets are worth the confidence in 2026. Just please remember, these are longer term targets, multi-year targets, though it would be nicer if it was sooner than later.
Thank you for watching and listening. This annual broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.